course, when we think of finances, personal and even on a grander scale, one thing we tend to use as a barometer is the stock market. I'm going to check in with this gentleman right here, Joe Latour of Latour Asset Management. Joe, always good to see you.
You
always
too,
good.
Tom.
Okay, stock market, all-time high, yet I know there are fluctuations everywhere. I don't know how to keep track of it, but is this a time of concern?
Well, yeah, it's a time of concern, Tom. I mean, consider this, that since from 2020 until now, $11 trillion has been added to the national debt. Much of that has been in way of stimulus, okay?
Right.
And much of it has found its way into the stock market. So right now, the stock market's kind of on a sugar high, all right? So will it last? You know,
That sounds like a cautionary phrase if you're saying it's on a sugar high.
It really is, because the fundamentals of our economy are not strong right now, okay? You're benefiting right now, so what are contrarian investors doing? All right, what's a contrarian investor?
Explain that, yeah.
Well, a contrarian investor is one that buys low and sells high. So even young people, even if you're not retirement age, if you're a young person out there, now's the time to be thinking about unloading with the stock market at all-time high. And here's the thing, people tend to miss their exit.
That's exactly right. You're waiting a little, oh, I could get a few more, and it crashes below
so
you.
There's something about all of us, a little bit of greed in there that we want to say, well, nobody knows when the stock market's going to reach its peak.
True.
Or when this sugar high is going to be over and the thing's going to end up. We're kicking the can of recession down the road, Tom. And so now is the time to consider selling these high positions and putting them into, hey, interest-bearing accounts, other things that are, the silver lining behind inflation is high interest rates on fixed things like CDs, fixed annuities, money markets are really doing very well right now. And again, that is going to be short-lived. So people need to take advantage of it while it's available.
Is that kind of an overall view that you need to have now may be a good time to start moving your money? Or are there specifics? I mean, I know it's not as easy as this. Are there things you tend to look for that make you go, I need to think about moving my money?
Yeah, well, again, when you see the market for irrational reasons at all-time highs, breaking all-time records, now's the time to think about readjusting. Yeah, lock in those high gains, put it into something that you can get an inflation, a rate of interest that will help you keep up with inflation, and start using cautionary investments that can give you upside potential while giving you downside protection.
We've talked on these kind of themes before. Is this the time to start playing defense rather than offense? Yeah,
now's the time to start using some wisdom, and again, start getting things in position in a defensive strategy.
Okay, where do you come in this whole strategy?
Well, again, so, and you and I have talked before, I mean, we are more, the lion's share of our clientele are people that are either approaching retirement or they're already in retirement. So getting repositioned in what I call distribution and preservation positions. And there are many options out there today that allow you to participate in a good portion of the upside of the market gains, while giving you good downside protection. There are different investment vehicles, and we're happy to talk to people about that.
I was going to ask about talking to people about just that. People can come to you and you can help them find, when you're talking that age range, you're talking about keeping wealth and growing wealth a little bit, maintaining things, so you don't have a dip in your lifestyle.
Exactly. You want to have a rate of return that helps you keep up with inflation going on into your retirement years.
Okay.
You're not looking for the big gains. You don't want to be speculative. You don't have the time horizon to make up for huge losses.
That's for youth to do, the young folks.
That's right. That's for the young folks that can ride the cycles of the market. But even young people, there's no sense in you having to make up for a 50% downturn in the market. If you just use a little bit of contrarian mindsets, it will help you hang on to the gains that you've made in this all-time record-breaking market.
If people would like more information about Latour Asset Management, would like to be able to sit down and talk with you a bit, how do they do that?
Well, they just give us a call. The number's on the screen, or they can go to our website. That's also on the screen. And just get in touch with us. We're happy to have a conversation.
Always good to talk to you.
You too, Tom.
Latour Asset Management.